What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this quick cheeky 2-hour that I managed to grab based on a rejection from a 15-minute fair value gap before price aggressively reversed. This is a good example of why being aware of where the premium and discount is and aggressively taking profits can pay off. Let's jump into the analysis now and see how we came up with this setup. As always, we're going to start off our analysis on the 15-minute time frame, specifically looking at our session liquidity tracker, which is showing us untapped liquidity New York PM and the Asia high. We've just swept the Asia low. So the extended green lines are untapped session liquidity. The red lines are where we have swept liquidity. Links to all of the indicators that I use, including the session liquidity tracker, are down in the description box below. So if you'd like to get a setup looking similar to mine, then head on down there for details. We can see obviously very bearish price action. The new week opened here, London put in a high, and then we just melted all day yesterday, essentially continuing the higher time frame trend where we've been coming down for several weeks now. Coming into today's session, we can see that we have left a rather large bearish fair value gap in the Asia session. And this is underlined by several equal highs. So let's just zoom in here so we can see this. We can see Asia tried several times to come up into this fair value gap and failed. So there's lots of resting liquidity at this point. So this for me would be a high probability rejection area. So I'm going to stick buy side liquidity there. It looks approximately 50%, 60, where's the optimal trade? Yeah, look at that. So it's right on optimal trade entry as well of this Asia range. So we've swept the low here coming into the London session. So our London session is going to start at 1 AM, which is the open of a new 4-hour candle. We could potentially be looking for a long up into this area. We would definitely want to be taking profits around here because when we take this buy side, we could get a pullback. Also, I can see relative equal highs into this 15-minute fair value gap as well. So we've got two pretty good draws on liquidity this morning. The first from the Asia session, the second from the New York PM session. So I'm just going to mark again relative equal highs, buy side liquidity coming into this fair value gap. So there's two potential rejection areas here, so we can get in a trade in line with the continued bearish price action coming down. We obviously have this smaller 15-minute fair value gap that we have just created. I'll be honest, I wouldn't be looking for a trade here. We're too low down in the range. I'd want a more significant pullback, at least into a discount of the Asia range if I'm going to look for a continuation here. So my only option is that we come down, maybe sweep this low again for a long position back up, or alternatively we look for shorts in this area up here. So that's the 15-minute analysis with our key areas that we're looking for. We've got balanced price range, so we have a bullish fair value gap into a bearish fair value gap. So where these two overlap is a balanced price range. I'm going to need to make note of that as well. Balanced price ranges are highly sensitive areas. So it's falling obviously within this larger fair value gap. We have this two consecutive up closed candles would be an order block with a balanced price range with a fair value gap, optimal trade entry just below, and a load of liquidity there. So I would imagine this to be a sensitive area, but obviously we do have the equal highs as a draw. So if we're taking shots here, I am conscious that we do have these equal highs here into a fair value gap as well. So it'd be quite aggressive trade management at this point, but the overall trend is bearish. Drop onto the 5-minute now. So here we've had a pump up in the close of the New York PM session before we come into Asia. We've put in a high, price has pulled and broken structure, but then pulled back into this area, but it hasn't taken the high. This is the last up closed candle before we put in this high. I would imagine that this, falling in line with this balanced price range, could be classed as a bearish breaker block. This falls in line with 50% of the 15-minute fair value gap on obviously the BPR with the liquidity below us. That's the area that I'm really interested in. Lots of confluences there. Obviously, if we run straight through that, we do have equal highs at this point as well. There's no red news on the calendar for this morning. However, we do have a German bank holiday, which may slow down price action. So let us start scrolling through now and see how price reacts. So we're into the London session, a little bit of consolidation to start with. So a big engulfing candle here. So we did have a fair value gap at this point. Into this order block. So we kind of consolidated around this area to start with. And now we've got this big engulfing candle. So let's see what this wants to do if we can get up into this discount area. Big bearish candle, so big rejection from the bottom of that fair value gap. So I haven't swept this low. Candles are getting bigger at the moment. So we're coming into 2 AM now. So this is the open of the new hourly candle. Rejected off that 15-minute fair value gap. Long wick, however, so this is quite bullish. Let's see what the next one does. Again, respecting this 15-minute fair value gap. But I'm not going to be looking for a short at this point because I do want to be up into a discount. We've created liquidity below us. So we do have a draw on liquidity here with these kind of relative equal lows. So kind of engineering a lot of liquidity here. And finally, we'll get a move out of this zone. So we've closed through the 15-minute fair value gap, coming into 215. Back into this fair value gap and a rejection. Sloppy price action at the moment. So price now is moving higher. Okay, so we've come up, buy side liquidity is at this point here. So we've got this 15-minute fair value gap that we're looking at. So this is what we were eyeing originally. I'm going to wait for a 15-minute candle close. So I want to see how price reacts in this area on a 15-minute candle close, because this is a 15-minute fair value gap. This 15-minute candle pumped up, hasn't closed through, and it's closed more or less at 50%. Respected the balanced price range, respected the breaker block, closed around the 50% area, so consequent encroachment of our fair value gap. So this is what got me interested in a short trade. So I did take this trade live, so we can jump into the live price action now just to see how I planned this execution. But the main trigger for me was seeing this 15-minute candle close at 50% into the silver bullet hour. So I was looking for a short trade now to come and take away some of this session liquidity. So I'm just taking a short trade at this point. We've come into a 15-minute fair value gap. We have a 5-minute breaker inside the 15-minute fair value gap, which is this bearish candle here. Price has come up and tapped it. We're respecting the top of the 15 on the 1 minute. We've had a break of structure. We've left a bearish fair value gap. We've left a breaker block. We've closed over an inversion fair value gap, and we've got an order block. And then looking at price action, we have loads of ramped liquidity here. Take profit at 1-to-1, and then ultimately targeting the session lows. Stop loss is a couple of points above the highs. That's not quite accurate. I've got a little bit bigger stop. And my aim hopefully is that we will run this ramped liquidity here. We do have session untapped liquidity, equal highs into a 15-minute fair value gap above us. But this has got all of the PD arrays that I want to see, so we should hopefully get some kind of retracement at this point. At least take this swing low, relative equal lows on the 1 minute into a fair value gap. Okay, nice. So we hit TP1, so that's 50% of the trade off at 1-to-1. We've got relative equal lows here in this fair value gap. And we have a lot of ramp to liquidity here, but where are we? So yeah, we've got optimal trade entry just below us, load of liquidity, and then obviously these equal lows just above the 50% discount. So I want to be quite aggressive as far as take profits go, because obviously we do have equal highs above us as well. So I'm thinking of taking a take profit to somewhere in this price leg. So quite aggressive management here. I'm going to take another 50% off at this point. We've got red folder news in the New York AM session. Jolt's job openings. Again, just with price action at the minute, I'm being very cautious, aggressive with my take profits. I'm going to take 50% off there and then leave the rest to run probably to 0.9, which gives us 4.5R. Going to run through the actual analysis. We have a 15-minute fair value gap, 15-minute balanced price range, in fact. So similar to yesterday, we've got this balanced price range area 3 times been traded through there. So we've got this BPR. We've got on a 5-minute this breaker, which is the last down closed candle to create this high. This isn't a new high, so that's why I'm concentrating on this one. This candle created the high in this leg, pulled back, didn't take the high. So I'm ignoring this section of price action and looking at this one, because this is the down closed candle that created the high. I'm using that as a breaker block. This is inside the 15-minute fair value gap, inside the 15-minute balanced price range. The 15-minute candle, which is this candle that I was looking at, respected the BPR and almost 50% of the fair value gap. So that's what got me interested in a trade. So I dropped onto the 1 minute. On the 1 minute, we then had our breaker structure, leaving a fair value gap in here, leaving the breaker block in here, and closing over this bullish fair value gap. So this is an inversion fair value gap as well. Entry at the breaker block, which was tagged in by a pip, so literally 0 drawdown. And then targeting the low. And this looks a lot tighter on here actually than it was on my MetaTrader. See, we're having a reaction at 50% here. So we've got this fair value gap, 2 overlapping fair value gaps. Order block in here. We're having a reaction around the 50% mark, which is why I wanted to take that profit early. Relative equal lows for sell side, into an order block, into fair value gaps at 50%. So price could just come down here and then go for the highs. So that's why I was quite aggressive with my take profits. And obviously we've got news later on in the day. Yeah, so there we go. We can see price has retraced, just rejected straight off this 50%. Gone back, hit our stops, so it's definitely worthwhile closing another 50% of the trade down here, rejecting off this order block. Good move down, stopped at the 50% mark. Big retracement, and now it looks like we're probably going to go for those highs above us. And there we go, that's the analysis. So not the greatest trade in the world. We didn't get the bearish move I was expecting down to the lows. Came back to the 50%, pulled higher. We've obviously taken the relative equal highs from the Asia high into this 15-minute fair value gap. Didn't really get any decent reaction. At that point, prices come up even higher, put a high in London and consolidated. We are breaking lower now coming into the New York session. So we'll see how we get on, but there's red folder news in New York, so I'm not planning on trading that, I don't think. I'll be happy with my 2R that I bagged earlier on. So thanks for watching. If you enjoyed the video, please leave it a thumbs up. If you got any questions, leave it down in the comments section below. And as always, consider subscribing if you're enjoying the content. I'm dropping videos like this every single day. Seeing some fantastic growth on the channel, and it'd be awesome to have you on board. Thanks for watching. I'll see you again in the next one.